Hello traders, Gary Wagner here just before 12 noon in Honolulu, 6 o'clock in New York. It is Thursday, 3rd day of October 2019, and this is the Daily Report for Gold and Silver. We have a continuation of market participants focusing on the manufacturing data that came out Tuesday, although we did see the U.S. equities markets turn around after a couple of brutal days on Tuesday and Wednesday. We did see the precious metals higher in terms of gold and silver, platinum and palladium bucking that trend. Tomorrow, of course, is the U.S. Labor Department's jobs report, and that could have a profound impact on the future direction of equities as well as the precious metals. Realize that when we had such a weak report that came out on Tuesday, it's certainly going to weigh heavily on Fed members that will meet for the next FOMC meeting at the end of this month. This is yet another piece of data, and maybe even the last important piece of data, that they will use to determine whether or not there is a rate cut. According to the CME's FedWatch tool, the probability of a rate cut in October is now up a little past 80%, whereas a week ago today it was sitting at around 49%. Let's take a look at our current pricing. Although gold is trading off of the high achieved today, which was roughly at 1525, it's currently trading at 1511. 1510.80. That's putting it down $3, but realize this is after the morning break and what I call the afternoon trading session. It actually closed up about $3 on the day. When we look at silver, silver is trading modestly higher, 1762. However, in the afternoon session, it has been fixed a little bit lower and currently down about 5 cents. We have platinum currently trading at $894 on the nose. Lastly, we have palladium at $1,630.10. We are currently long gold. We'll take a look at that, along with discussing some of our exit strategies, all on today's show. Let's take a look at our charts. If you recall, from yesterday's show, we were talking about the fact that we had quite a nice recovery, and the recovery is from the lows that were achieved on Tuesday when the market traded as low as 1465, and some very, very weak data, manufacturing data, caused the market really to rebound and close in positive territory. We talked about the fact that that created a simple two-day pattern, simply called a bullish harami, and we needed to see confirmation before we would implement a buy signal. That is exactly what we got yesterday when we had a green candle with a higher high and a higher low, and that is the three variables that we look for in terms of a confirming candle for a bullish reversal pattern. Today we had the market continue to higher ground, and although it hit 1525, we see that it softened as we went into the last half of the session and traded to about 1511. We are now in what I call the afternoon session. This is overseas, of course. In Australia, market is currently at 1512.30. We are long at 1506, and we do have a stop that is sitting just under yesterday's low, 78.13. Now, we have a jobs report coming out tomorrow, so depending on what the numbers are going to have a profound and deep impact, not only on the direction of equities and the precious metals, but on the mindset of voting Fed members that will be meeting on October the 29th, concluding on the 30th. Because it is such an important set of data, it's only out once a month, and it really gives the Fed members, as well as market participants, a solid indication of what the economy is doing by the number of new jobs that are added. That being said, when we consider that the ADP report that came out the other day was tepid at best, the estimates were at 125,000 jobs being added. It came in at 135,000, both numbers are very, very weak. So we could expect to see the same type of thing in tomorrow's jobs report. That being said, where do we think this market is headed long term? Because right now we want to begin to talk about our exit strategy. And the key to that is as follows. Whether or not we did complete a wave 4 correction is really important in determining where we think it could go. I believe that there is a high probability that that has occurred. The low that it hit on Tuesday will be the conclusion of it. Of course, the last couple of days we have seen the market move higher. That means that we are basically now in an impulse wave number 5. Now, in terms of projecting a fifth wave, there are two recognized techniques that traders use. The first technique is simply saying that wave number 1 and wave number 5 are going to be approximately equal. So what I've done is I have created an extension from 1169 to 1350, and of course we're beginning it at this bottom here at about 1465. The second technique looks at the wave that came in, wave 3, and then projects a 0.618% extension of that number. And here's what I find fascinating. When we look at the results of both of those techniques, we have basically a Fibonacci extension harmonics. I've not seen this that often. In other words, a 1-to-1 relationship between wave 1 and wave 5 is 1646.50, and a 0.618% extension of wave 3 is 1645.80. I would have to say that they are both pointing to the same potential number, and that's what I would look at as a top. Now, traders realize typically on any wave we're going to have a fractal count underneath that. In other words, when we look at this wave 1, we can subdivide that to go 1, 2, 3, 4, and 5. And why I'm saying that is because it's not going to be a straight parabolic line up. We will most definitely have a high probability of getting that kind of a wave count within wave 5. Nonetheless, these are our numbers: 1645, 1646, using two different techniques, both coming up with the same number. This has been Gary Wagner, wishing you, as always, good trading. We will talk to you tomorrow for the weekly wrap-up and review. Bye-bye.